There are a few reasons you will need to determine whether a taxpayer paid over half the cost of maintaining their home. 1. When a qualifying individual for whom a home is maintained has income available to pay part of the cost of maintenance. 2. When the taxpayer receives public assistance. 3. Another person pays part of the cost of maintenance. Think about all the costs associated with the cost of maintaining a home for head of household purposes. See the cost of maintaining a household section if you need some help. Pause if you need to then resume when you're ready to see the answers. Some of the costs of maintaining a home are mortgage interest, real estate taxes, insurance on the home, rent, fire or casualty or renter's insurance, upkeep and repairs, utilities, and food consumed in the home. It's important to understand the difference between support for a dependent and costs of maintaining a home for head of household. For example, food eaten in the home is counted for head of household, but food eaten outside the home is not. Both types of food would count for dependency support, though. Right now, we have our blinders on as we focus on the cost of maintaining a home as it concerns the head of household filing requirement. The good news is there is a helpful worksheet available. This illustration is also in the participant's guide in the cost of maintaining a household section. Remember that the principal portion of a home mortgage payment is not considered part of the cost of maintenance. However, the portions attributable to interest, taxes, and fire and casualty insurance are counted as part of the cost of maintenance. Certain taxpayers who provide over half the cost of maintaining a home in which a qualifying person lives may be able to choose to file head of household, which is a more preferential tax status than the single filing status. We've established the three requirements for using the head of household filing status. Now we need to look closer at some of the exceptions to the rules, but first we will answer a check for understanding question. Which of the following expenses is not included in the cost of maintaining a home for the head of household filing status? Mortgage principal, food consumed in the home, insurance on the home, utilities. Pause for a moment to dance and think about it. Resume when you're ready. Did you think the answer was A? Bravo! Mortgage principal is correct because only the mortgage interest paid, actual real, estate taxes, and insurance paid on the home are included. The amount of principal paid is not included. Let's look at why B, C, and D are incorrect. Food consumed in the home is incorrect because food consumed in the home is included in the cost of maintaining a home for the head of household filing status. Food consumed outside of the home is not included for the head of household filing status, but it does count for dependent support. Remember Tax Pro Joe and his blinders. Insurance on the home is incorrect because the amount paid for homeowners insurance is included in the cost of maintaining a home. Utilities is incorrect because utilities are included in the cost of maintaining a home. Thanks, Rockstar. Let's work through an example. We're going to complete the household support worksheet for Navy, who is unmarried, and lived with his child, Sonny, and his grandmother, Claudia. Navy will claim Sonny, but he and Claudia share the household expenses, so he isn't sure if he can use the head of household filing status. Let's look at the expenses that Navy and Claudia paid. Since this worksheet is being completed for Navy, his portion will be entered in the amount you paid column. The first expense is rent. The total rent was $18,000. Navy paid $10,000. Claudia paid $8,000. Is this an expense for Sonny's support or the household support? Both. In a rented home, the actual rent paid is used for both household and dependent support. However, if Navy or Claudia had owned the home that they live in, the mortgage interest and property taxes paid would be used for household support, and the fair rental value of the home would have been used for dependent support. We'll add the total rent and the amount that Navy paid to the worksheet. The next expense is utilities, which are $4,000 for the year. They split the utilities each month, so each paid $2,000. Is this an expense for Sonny support or the household support? It's both. We'll add the total utilities and the amount that Navy paid to the worksheet. The next expense is Sonny's medical bills, which were $2,500 for the year. Sonny fell and broke his arm and had to go to the emergency room. Navy was short that month, so Claudia paid the bill. Is this an expense for Sonny's support or the household support? Sonny's support. Even though support isn't an issue for a qualifying child dependent unless the child paid more than half of their own support, this is an item that counts towards the dependent's support, not the household support. This one doesn't go on the worksheet. The next expense is home repairs, which were $1,000 for the year. Navy paid this because the repairs were to the plumbing in his bathroom. Is this an expense for Sunny's support or the household support? Household support. We'll add the total repairs to the worksheet. Navy paid the full amount, so the same amount goes in his column. Let's consider food next. They paid a total of $5,000 for the year for food, $3,000 for food eaten in the home, and $2,000 for food eaten outside the home. Claudia paid for all of the food. Is this an expense for Sunny's support or the household support? The food eaten in the home counts towards the household support and Sunny's support, but the food eaten outside the home only counts towards Sunny's support. We'll add the $3,000 for the food eaten in the home to the worksheet. Since all of the food was paid for by Claudia, nothing goes in Navy's column. The last expense is cable and internet. This was $1,500 total, and Navy paid $1,000 of the expense. Is this an expense for Sunny's support or the household support? It's both. We'll add the total for the cable and internet and the amount that Navy paid to the worksheet. Now that we've got all of the expenses entered, we fill in the totals. What goes in the total fields? The total expenses are $27,500 and Navy paid $14,000. The last thing that we need to do is calculate the percentage of the household expenses that were paid by Navy, which is 50.91%. Navy is single and will claim Sunny. Does he qualify to file as head of household? Yes. Navy meets all of the requirements to use the head of household filing status for a single taxpayer. He was unmarried on the last day of the year. He paid more than half of the cost of maintaining the home for the year. Sunny is his qualifying person. There's one more special set of rules to cover. What do most people think of when they hear custodial parent? Many people believe it is whomever the court documents name as custodial parent. Although that might be true of the court system, that doesn't mean it's automatically true when we are talking about taxes. Family law and tax law are two different topics, and we need to keep our blinders on and focus on tax law. In the eyes of the IRS, who is the custodial parent? For tax purposes, the custodial parent is the parent with whom the child lived for the greater number of nights during the year. The number of nights with each parent is totaled, and the parent with the greater number of nights is considered the custodial parent for that year. The parent with whom the child spent fewer nights is the non-custodial parent. Look at this calendar. If the taxpayer had circled the nights on the calendar that their child stayed with them, assuming all months were exactly the same and the child stayed with the other parent for the remaining nights, would the taxpayer be the custodial or non-custodial parent? They would be the non-custodial parent because there are 10 days circled, which leaves 20 days with the other parent. Can anyone tell me why this distinction between custodial and non-custodial parent is so important? The short answer is the custodial parent gets to claim the qualifying child for tax purposes. The IRS defined custodial parent is the one who is entitled to claim the child, hands down. But a non-custodial parent may be allowed to claim the dependent for some tax benefits if certain requirements are met. Let's break these requirements down. Children of divorced or separated parents. The rules for a qualifying child are handled a bit differently in cases involving divorced or separated parents. Do these rules only apply to parents who have been married? No. These rules also apply to parents who were never married. Do not let the title confuse the issue. For these rules, does one parent have to provide more than 50% of the child's support for the year? No, one or both of the parents together must have provided more than 50% of the child's total support for the year. You can add both parents' support together to come up with total support over 50%. To use these special rules additionally at the end of the year, the parents of the child must be one of the following: divorced or legally separated under a court decree of divorce or separate maintenance. Separated under a written separation agreement according to state law. Lived apart for the last 6 months of the year, regardless of whether they were ever married. Who does the child have to live with for more than half the year? One parent only? Both parents? How does that work? The child has to have lived with one or both parents for more than half the year. You again get to add all the time spent with one parent to the time spent with the other parent. That total has to be more than 50% for the year. So how does the custodial parent release the dependency to the non-custodial parent? Form 8332 unless they have a qualifying divorce decree from before 2009. Let's look at this form. Form 8332, release/revocation of release of claim to exemption for child by custodial parent, is used for the custodial parent to waive their right to claim the dependency. Exemption for a qualifying child to allow the non-custodial parent to claim the exemption. If the non-custodial parent is allowed to claim an exemption for the child, They are eligible to claim the child for the purpose of the child tax credit or other dependent credit, and if applicable, the additional child tax credit. This is true even if their filing status is married. Filing separately, the custodial parent in such a case may not claim the child for those credits. Form 8332 cannot be e-filed. If this form is used, the tax return must either be mailed or the taxpayer needs to attach Form 8332 to Form 8453, U.S. Individual Income Tax. Transmittal for an IRS e-filed return, and mail to the IRS. Time for the next check for understanding question. Once custody is determined for tax purposes, in order for a non-custodial parent to claim a child for the purpose of certain tax benefits, all of the following must be true, except the parents were either divorced, separated, or lived apart at the end of the year. Both parents together provided more than 50% of the child's support. The divorce agreement states they are the custodial parent. The child lived with one or both parents more than half the year. Pause and think about it and be sure to hydrate. Resume when ready. Finally, the answer is C instead of A. The divorce agreement states they are the custodial parent is correct because this is not a requirement. The divorce decree does not dictate the custodial parent in regard to tax law. The parent with whom the child stayed for more nights is considered the custodial parent by the IRS. C is the winner, so let's see why A, B, and D are incorrect. The parents were either divorced, separated, or lived apart at the end of the year is incorrect because this is true. In order to use the divorced or separated parent rules, the parents must be either divorced, legally separated, or lived apart at the end of the year. Both parents together provided more than 50% of the child's support is incorrect because this is also true. More than 50% of the child's support must have come from one or both parents. Support from each parent is added together in determining if the total support was over 50%. The child lived with one or both parents more than half the year is incorrect because this is true as well. To use the divorced or separated parent rules, the child must have lived with one or both parents for more than half the year. Fantastic job! Let's try an activity. Only the dependent benefits resulting from the divorced or separated parent rules can be split. They cannot be split between a parent and a grandparent, for example. In any case, outside of the divorced or separated parent rules, dependency benefits are all or nothing. Someone either gets the dependency benefits for everything, if they qualify, or they do not get the dependency benefits at all. When the rules for divorced or separated parents are used, there are 7 potential benefits that come into play with a child on the tax return. Can you remember what the key distinction is when deciding which benefits can be used by the non-custodial parent? The residency requirement. Aside from allowing the non-custodial parent to claim the child as a dependent, Form 8332 cannot override the requirement that the child live with the taxpayer for more than half of the year. Which of the potential tax benefits can travel to the non-custodial parent and which tax benefits stay with the custodial parent? While under tax law, it is the choice of the custodial parent whether they want to sign Form 8332. It is important that taxpayers and tax preparers are aware that sometimes there are court documents stating which parent must sign Form 8332. Though the IRS only looks at the custodial parent through their definition, we must be cognizant that taxpayers may be subject to rulings by the courts which may have negative consequences for them if not followed. It is best to use Form 8332 in all cases where parents are separating benefits. However, Form 8332 is mandatory if the divorce took place after December 31, 2008. Now on to the next check for understanding question. The custodial parent can allow the non-custodial parent to claim certain tax benefits. Which of the following cannot be claimed by the non-custodial parent? Additional child tax credit, child tax credit, head of household filing status, other dependent credit. What do you think? Pause then resume when ready. If you guessed C, you are a Jedi. Head of household filing status is correct because the head of household filing status requires that the child live with the parent more than half the year. This cannot be overridden with the divorced or separated parent rules. Why are these other answers incorrect? Additional child tax credit is incorrect because the additional child tax credit always follows the child tax credit and can be claimed by the non-custodial parent if they qualify when the divorced or separated parent rules are used. Child tax credit is incorrect because the child tax credit can be claimed by the noncustodial parent if they qualify when the divorced or separated parent rules are used. Other dependent credit is incorrect because the other dependent credit can be claimed by the noncustodial parent if they qualify when the divorced or separated parent rules are used. Brilliant job, Jedi. The last filing status that we need to discuss is qualifying surviving spouse. The qualifying surviving spouse filing status is really a transitional status. It transitions the taxpayer, if they qualify, from married filing jointly to head of household over a period of time. The requirements that must be met for a taxpayer to use the qualifying surviving spouse status are, again, different from the prior four filing statuses. Let's review the requirements of qualifying surviving spouse. The second requirement is that the taxpayer was entitled to file a joint return with their spouse for the year the spouse died. It does not matter whether the taxpayer actually filed a joint return. The qualifying surviving spouse filing status can be used if the taxpayer did not remarry before the end of the tax year in which the spouse died and remained unmarried through the end of the tax year for which the taxpayer seeks to use qualifying surviving spouse filing status. If they did remarry, what filing status options would they have? Married filing separately or married filing jointly with their new spouse. Once they remarry, the option for qualifying surviving spouse is gone unless the new spouse also dies. What filing status does the deceased taxpayer have to use on their final tax return if their surviving spouse remarried before the end of the year? Married filing separately. If a taxpayer's spouse died in 2022, how many years may they be able to file as qualifying surviving spouse, assuming all requirements are met? 2. 2023 and 2024. The taxpayer's spouse died in either of the two tax years, immediately preceding the current tax year. Does the child, stepchild, or adopted child have to be claimed as a dependent on the return in order to qualify for qualifying surviving spouse? No. The requirement is that they can claim them as a dependent or could have claimed them as a dependent, except that in 2024 one of the following was true. The child had gross income of $5,050 or more. The child filed a joint return. The taxpayer could be claimed as a dependent on someone else's return. Where does the taxpayer put the child's name on the Form 1040 if they are not claiming the child as a dependent? Enter the child's name in the entry space below the filing status checkboxes next to qualifying surviving spouse on Form 1040. If the child who qualifies the taxpayer for this filing status isn't claimed as their dependent in the dependents section of the form. For qualifying surviving spouse, how long does the child have to live in the home during the tax year? All of it. The child must have lived in the taxpayer's home for the entire year, except for temporary absences. The last requirement is that the taxpayer paid over half the cost of maintaining their household, which is the main home for the taxpayer and their dependent child. Fred's wife died on February 6, 2024. Fred has a dependent son, Joshua, age 10, who lived with him all year. Fred paid all of the household expenses. Joshua did not provide over half of his own support. Fred's wife died on February 6, 2024. Fred has a dependent son, age 10, who lived with him all year in a home Fred maintained. Joshua did not provide over half of his own support. Assuming Fred does not remarry, and he continues to maintain the home in which he and his dependent son both live, what is the most advantageous filing status Fred can use for 2024? Marry filing jointly. Fred's wife died on February 6, 2024. Fred has a dependent son, Joshua, age 10, who lived with him all year. Fred paid all of the household expenses. Joshua did not provide over half of his own support. Again, assuming Fred does not remarry, and he continues to maintain the home in which he and his dependent son both live, what will be the most advantageous filing status for Fred in 2025? Qualifying surviving spouse. Fred's wife died on February 6, 2024. Fred has a dependent son, Joshua, age 10, who lived with him all year. Fred paid all of the household expenses. Joshua did not provide over half of his own support. Still assuming Fred does not remarry, and he continues to maintain the home in which he and his dependent son both live, what will be the most advantageous filing status for Fred in 2026? In 2026, Fred may use qualifying surviving spouse. Fred's wife died on February 6, 2024. Fred has a dependent son, Joshua, age 10, who lived with him all year. Fred paid all of the household expenses. Joshua did not provide over half of his own support. Again, assuming Fred does not remarry and he continues to maintain the home in which he and his dependent son both live, what will be the most advantageous? Filing status for Fred in 2027. Fred's wife died on February 6, 2024. Fred has a dependent son, Joshua, age 10, who lived with him all year. Fred paid all of the household expenses. Joshua did not provide over half of his own support. In 2027, Fred may use head of household. Keeping all of the requirements that are similar but not the same straight isn't always easy. This slide can help summarize how the relationship requirement changes for each different tax benefit. Qualifying child dependency, qualifying relative dependency, head of household for an unmarried taxpayer, head of household for a married taxpayer, and qualifying surviving spouse. This chart is also available in the appendix. Tax Pro Joe likes this comparison of relationships because it helps him to focus on which requirement he is currently considering. Now on to the next check for understanding question. Which of the following dependents can be used as a qualifying person for the head of household filing status, but cannot be used for the qualifying surviving spouse filing status? Daughter/son, foster child, adopted child, stepchild. Pause and think, then resume when you've got it. If you guessed foster child, you are correct. The foster child relationship cannot be used for the qualifying surviving spouse filing status, but can be used for head of household. Let's go through the incorrect answers. Daughter or son is incorrect because a daughter and son can be used for both filing statuses. Adopted child is incorrect because an adopted child can be used for both filing statuses. Stepchild is incorrect because a stepchild can be used for both filing statuses. Thank you for your participation. Now it's time to look at our case study for this chapter. For homework, you will be preparing the tax return for Bruce Wellington. This case study should be completed by hand prior to returning to the classroom. The taxpayer's information is found in the participant's guide in the case study section. Be sure to complete all the reading and exercises too. You are working hard and learning a lot. When you are done celebrating, you should fill out the evaluation for this video. Thank you for joining me, and see you next time.